Hello and welcome to this weekly morning market briefing. We've got lots to talk about, but firstly, share sale set to test financial impact of OpenAI's leadership turmoil, as well as that Hamas must locate dozens more hostages to extend truce, says Qatar, as well as that Germany faces threatening deindustrialisation as a result of rising costs and as a result increasing numbers of domestic manufacturers looking to move abroad. We've got lots to talk about on the charts, also lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around till you see that. Before we get straight into it, make sure to subscribe. But the first article to talk about obviously is OpenAI. Now, an upcoming sale of shares in OpenAI is set to test how much the past week's leadership chaos has cost the company and its backers. And this is obviously coming as big investors are still bullish about securing a high valuation. Now, we talked about this, a lot last week and the week before in relation to Sam Altman, the previous CEO and now CEO once again, who was removed by the board in kind of a power struggle moment in relation to him having too much relations to other projects at the same time. We understand that, he was traveling around the world, representing himself as kind of the leader of this industry, known by many, many faces within the industry, and very recognizable as a result, and was kind of leading that push, but at the same time he was actually looking to open his own microchip manufacturing company as well, and was sourcing capital for that. And the kind of board of OpenAI did see this, and as a result terminate his position along with his co-founder. And this obviously caused a massive stir up in relation to who the employees of OpenAI and ChatGPT actually wanted as their leadership. And it does seem that they did not want the board having so much power over the kind of individual which they actually supported the most in relation to the project of OpenAI and ChatGPT, with obviously OpenAI being a non-profit with many non-profit motives, whereas we do know that ChatGPT is a for-profit initiative, and therefore we were seeing those conflicts of interest take place as a result. But now Sam Altman has been reinstated. Investors are looking very bullish at securing a high valuation. Now, the employee stock sale is expected to value the company at $86 billion and will take place as previously planned, as it was originally planned before Sam Altman was ousted. Now, this will be the first test of investor appetite following Altman being sacked by the board, which highlighted the complex governance arrangements between non-profit and for-profit organizations, with the kerfuffle seeing venture capital groups call for Altman's reinstatement. And if we think back to it, it was employees within the hundreds, majority of employees at OpenAI were calling for Sam Altman to be reinstated. However, Sam Altman was listing his kind of, his requirements for him to be reinstated, those being, the board that was trying to sack him being removed, and kind of changing the way the company and organization is structured. And this obviously caused, much turmoil as a result, and there was kind of that back and forth. But it does seem that Sam Altman has got his way. He's been removed from the board. However, he won't join the board again, but he will be CEO, and the board was removed that used to exist, because the employees were planning to jump ship if Sam Altman was not reinstated. We know Microsoft was calling in many of the employees that had already left in response to this turmoil, and building its own AI division from those individuals. Now, investors still remain confident of the 29 billion valuation being trebled in the stock offering. Now, that 29 billion valuation did come when Microsoft invested 10 billion into the project, and as a result created that 29 billion valuation. And with this new stock offering, people are expecting the market cap to reach $86 billion. Now, some, however, do highlight that rival groups like Amazon and Google are serious challengers, and the extraordinarily high stock valuations for OpenAI have, of course, been triggered by its launch of the company's chatbot ChatGPT a year ago, making it the most hot force and dominant force in tech most recently. But with the board sacking and then reinstating Sam Altman, as we've spoken about, there is certainly instability to be noted, and this could heavily affect investors' perceptions of the company going into the stock offering and decrease its value or potential value as a result, with his reinstatement placing him back in CEO position, and could pave the way for a better corporate structure and a more clear focus on driving returns to investors, applause essentially, with Microsoft hoping for governance, which gives them a better say in the way it is run. So that's the current situation with OpenAI. Certainly one to keep your eye on as we do go into this stock offering. So keep your eyes on that. Next talk about though is Hamas in relation to the war in Israel. Now, Qatar's PM has said that for a truce between Israel and Hamas to be extended, the militant group will have to locate dozens more women and children, which are held in hostage in Gaza, with Qatar brokering the current ceasefire deal and noting that civilians and gangs will still hold many Israeli women and children hostage. Now, this is a topic that we've been coming back and forth to, largely in relation to the risks of a regional conflict, which obviously would dramatically affect global markets. Now, this topic we've been talking about so much because of that. We've talked about the potential oil prices increasing, along with the other issues with other nations being pulled into the conflict. But ultimately, this is all following the October the 7th massacre, where Hamas did storm the borders of Israel, coming out of Gaza and killing over 1,000 civilians and taking many more hostage. It's believed around 200 are still going to be held hostage after this truce does end, and so both sides are looking to ways where they can extend the truce to enable more hostages and prisoners to be swapped, with the current deal enabling 50 Israeli women and children to be freed for 150 prisoners, and this obviously also came with the deliveries of aid to the Strip, including fuel and that sort of thing. Now, the current situation, does also mean that Israeli men and soldiers and elderly individuals will not be released in these deals, and therefore they're only looking to women and children to release them. So it'll be interesting to see what does happen with the rest of those hostages, which they're not looking to exchange at the moment, whether that may be used to exchange for bigger kind of deals and that sort of thing. Hamas has previously held on to an Israeli soldier, I believe, for a few years, and that resulted in a prisoner swap for that Israeli soldier. So these sorts of things have happened before, and they are a very they can become very extended in the period of time which they last for, with Qatar now saying that 40 women and children are hostages in Gaza but not being held by Hamas, and the truce could only be extended if these individuals are found, which creates a new issue and problem for both sides. When the truce was agreed upon, 50 Israeli women and children were agreed upon, because according to Qatar, this was all Hamas had actually been able to secure, which is an interesting take on the situation, considering I believe the figure of the number of hostages originally taken by Hamas and other Palestinian militant groups within Gaza was around 250, and so if we know only 1/5 is actually being held by Hamas, this is a large issue for future operations of gathering these hostages and bringing them home. And following the deal beginning Friday, Hamas has already released 39 women and children, with Qatar saying that failure to secure an extended ceasefire could risk a regional conflict. And this is the big issue and topic that we've been talking about, is this risk of a regional conflict, which we have to keep our eyes on, as it will affect markets greatly. Also, Qatar have criticised the West for a lack of pressure on Israel for a ceasefire. Because as we know, Qatar has been on the more pro-Palestinian side throughout this conflict, with the, even just straight after following, the October the 7th attack, Qatar were quick to kind of support, claims to this being kind of Israel's fault as a result of the kind of history of the conflict, as well as saying, destroying and eradicating Hamas from Gaza was not realistic as an aim. So that's an also interesting point to note, is, Qatar, making it clear that they don't believe eradicating Hamas, which is Israel's clear goal in this conflict, isn't even realistic. So keep your eyes on this topic, of course, as we go into the week. But next, talk about, is Germany facing creeping deindustrialisation? Now, we keep on coming back to Germany because it is the biggest economy within the EU. And it is struggling greatly in relation to, its industrial sector, its economy in general, inflation, growth, and that sort of thing. And it's all affecting German markets and, the Eurozone as a whole. With the chief executive of steelmaker Salzgitter has warned that Germany's big energy users must commit to the country as a base to stave off creeping deindustrialisation of Europe's largest economy. And this comes as manufacturers of materials needed by industry such as steel or chemicals were to leave the country due to high energy costs. And this has been a large issue for Europe as a whole, but Germany very much so, with this causing political instability as well. And as we know, the German car manufacturing market and industry, has been heavily impacted by, these issues, and as a result has taken a deep contraction, which obviously is very, very bad for the country. Now, the comments followed the data that 32% of industrial companies in August told the German Chamber of Commerce and Industry that they favoured investment abroad, which comes in double the 16% identified in last year's survey. So a clear rise in the number of companies which are now seeing Germany as a less attractive place to set up a business, with these changes largely being driven amid concern over a future without cheap Russian gas. And it's already been a difficult month for Germany's industry, as well as several large climate-related projects such as long-awaited rail infrastructure investments have been thrown into doubt after the government froze payments from a climate and transformation fund. And this is obviously a topic that we did cover last week in some depth, with this freeze following a decision by Germany's top court that 60 billion euros allocated to the fund designed to help decarbonise the industry was illegal. So keep your eyes on this topic certainly. But next to talk about is the charts, of course, with the first topic to talk about being the US 30 and US indices as a whole. With, as you can see here, US indices have been strong beginning, November the 1st. We've seen that bullish momentum to the upside. However, most recently we have been slowing in that bullish momentum, with that kind of consolidation on the upside for kind of the US 30 in particular. With even on the RSI, we can see this kind of bearish divergence forming, which tells a very troubling sign for the US 30 and signals a kind of bearish move to the downside. We've had this strong momentum to the upside, but then we've slowly moved to the upside following that, and now we are reaching this strong area of liquidity and resistance, which was highlighted in relation to the past kind of high, an area of kind of redistribution of the asset. And so we do see this area as a possible level of which price could sell off from. So as price now moves into that area, we need to keep our eyes on whether we get that bearish momentum from that level to the downside. So keep your eyes on this. Next to talk about though is the dollar, which could continue a move to the downside. Now it has broken out of this sort of flag, so we did see the dollar kind of retrace up and tap, you know, the 61.80 Fibonacci mark, but also come near that 78.60 level, with now that kind of move to the downside, triggering a complete break of this kind of bearish flag that we did see. And so the question is now whether we can see the dollar to take a move all the way down to that, you know, minus 27.20 level on the Fibonacci retracement tool. So keep your eyes on that. But next to talk about is Euro USD, which we have seen, you know, significant bullish momentum on since kind of, you know, mid-October, and you know it's been continuing this push to the upside really, and you know we were looking at a possible retracement down to these sort of Fibonacci levels, but we haven't absolutely seen that, and you know we did near that 38.20 level, and we have now seen a kind of bullish reaction to that level and a continuation to the upside, but that said, we still haven't broken above these prior highs, so we're yet to say how far price can go. So keep your eyes on Euro USD, as my charts become very, very cluttered, so keep your eyes on that. But next to talk about is pound yen, which has now broken above its prior highs, making new highs of course, and you know signifying increasing you know momentum for pound yen. But that said, you know, despite making new highs on pound yen, we are seeing this bearish divergence form, similar on the dollar, but yet this bearish divergence here does tell a worrying tale for pound yen. Obviously we had, you know, kind of that bearish momentum in this reversal period over here, but gaining the liquidity down around the 185 level for pound yen did allow, you know, pound yen to take a run to the upside, but you know seeing this bearish divergence could signal a sell-off, so keep your eyes on that. Next to talk about though is Bitcoin, which fails to break out of this range. So we did highlight this range over here. Bitcoin's been very, very volatile recently around, you know, SEC speculation in relation to the possibility of, you know, a Bitcoin ETF being approved. So we've seen, you know, great volatility, great upside momentum, but price did fail to break above this strong area of resistance and liquidity of the 38,000 level, and you know has now returned back under that level. So keep your eyes on that. Next, talk about for the charts being gold, which also is encountering strong sell-side liquidity and resistance. Once again, you know, moving into this $2,000 an ounce mark, you know, where we have had strong areas of resistance and sell-side momentum, which has prevented, you know, gold before, you know, around the 21st of November from breaking above those levels. So keep your eyes on this, as we are in an interesting position for gold. If we can break above that, you know, we've got a clear upside movement scheduled out for us, so keep your eyes on that. But lastly to talk about on the charts, of course, is oil, with oil remaining within this kind of you know, once again bearish flag. However, we haven't broken below that $80 a barrel mark just yet, with most recently, you know, breaking below it and moving above, and before that, you know, breaking below and moving above, and now we'll be coming into contact with that kind of bullish short-term trend line. We do have the chance of a significant bounce to the upside, so keep your eyes on that, of course. So keep your eyes on oil. Lastly to talk about though, of course, is the economic calendar, with quite a bit of data coming out this week. So firstly, we do have German consumer confidence and their inflation rate figure. So that's very important, considering we've been talking about, you know, German risks of deindustrialization, but also, you know, in relation to that inflation figure, with, you know, many industries struggling with those high, you know, price pressures, as well as consumers along with that. So understanding, you know, German inflation rate will also help us understand, you know, the future ECB monetary policy. So listen out for that. So there's that. We will have US consumer confidence and GDP growth rate figures coming out, along with Chinese manufacturing data being released, as well as that we will have Eurozone, French and Italian inflation figures coming out. So those are the really important pieces of data, for the Eurozone. This week we will have lots of Eurozone inflation data, so you need to hear that to understand it and understand how the ECB will shape their monetary policy. As well as that, we do have German unemployment rate being released, so very important German data coming out this week, which will help us shape, the German economic picture even better. As well as that, we will have US producer price inflation. We know, US inflation actually has been coming in below expectations, so it'll be interesting to see how that does. As well as that, we will have Swiss and Italian growth rate figures coming out, along with Canadian unemployment rate figure being released. As well as that, we will have US manufacturing data and, of course, Jerome Powell's speech. So listen out for Jerome Powell's speech, of course. He'll have, the main perspective monetary policy wise for the Fed, so make sure you listen out for that in relation to the dollar. But that's all from us at Wildwood Capital. Hope you have a great trading week. We've covered a lot on the articles, a lot on the charts, and lots on the economic calendar. But yeah, I hope you have a great trading week. That's it from us. See you later. Bye.